Joining us now live at the desk is Chris Richardson, partner at Deloitte Access Economics, and also in our Melbourne studio we've got Evan Lucas from Investsmart. Gentlemen, welcome. Now, Evan, let me ask you first, because really we've got this extraordinary day we've had on markets on Friday. Take us through what happened both in Australia and then what happened on Wall Street and what that means for tomorrow.
Yeah, and I'd also probably continue that to sort of ask what happened on Saturday morning for us here as well, because it's a continuating story. It was astounding, and I'm going to put it out there, I've never seen anything like what happened in the last 3 hours of trading in Australia. The fact that at the start of Friday we were down almost as much as 8% and looked like being the worst performing day that we had ever seen in the ASX. It snapped back, and not only did it snap back, the close to finish up 4.42% was astounding. It shows
extraordinary.
One thing.
I think we've got a graph we should put up actually just to show that.
Yeah, you should. It's more than extraordinary. I think it also is an absolute perfect representation of what happened the day before, what happened on Monday and on Wednesday. Markets, and I'm sure Chris can highlight this very well from the economic side, is that markets just do not understand how to price this. They are very, very uncertain about what this will bring. The clear fact that we are probably going to see a recession in several economies, if not the globe, and all of that sort of reiterates what's going on here. To then see that continue into the US actually basically completely retraced what it did on Thursday, which was their worst trading day since 1987. The fact that they finished up 9.8%, they were down 9.9% the day before, is again a reiteration for it. And then why I say what you need to look at with regards to the close yesterday, US and Australian futures are pointing to an open of over 6% for both of them. Now, I want to really put a caveat to that and say very clearly they closed before all of the information that we currently have around movements in Europe coming out. That needs to be very much clearly put there. I think it will reverse quite quickly with the fact that now France is in lockdown, Spain is in lockdown. You are seeing that kind of movement also going across the globe. New Zealand hadn't integrated their whole sort of travel ban. So futures are very interesting, and it'll be, what's more interesting is that on the open on Monday, to see what happens in that market. It'll give you an understanding of what volatility will be this week, because I believe it'll be just as bad as last.
Okay, Chris, I wanted to ask you, obviously markets took a real dive when President Trump announced his stimulus package. They seem unconvinced by Scott Morrison's stimulus package in Australia as well. However, as we saw later in the week, markets seem to gain more confidence. Your view on those packages, as well as what we can expect into next week?
And the main battle will be on the health front, as each nation struggles to make sure that the infections go slowly, and if they do, then everything else, including economies, have much more breathing space. But on that related battle around economies, what Australia's done is actually bigger and faster than you're seeing in Italy in terms of the dollars that we're spending per person, and the speed at which it's getting out the door, and the targeting. Same again, we seem to be bigger than the US. And the reason, it's not an accident. People get obsessed over do we have a surplus or not. What we have is a healthy budget, which is very different to the rest of the world. If our budget, relative to the size of our economy, if we had the deficit that the US does, it'd be almost 100 billion.
Yeah, even so, we've now got this tension. People are talking about the imperative to flatten this infection curve, to slow things down. Now, that obviously fights, and we're working on that more and more. What if schools shut down next week and restaurants, as has happened in the other parts of the world? And yet that fights, doesn't it, the whole demand side and trying to crank the economy back up?
Look, it does, absolutely. There are tensions there. Kids stay home. Well, at least a parent needs to stay home, and all that. Is that the parent who can work from home to some extent? Yes, there are definitely tensions there, but there are bits where there aren't tensions. There is a fight against a pandemic, and all sorts of sensible things you can do. But there's all sorts of not sensible things that people are doing, a whole lot of panic on a bunch of fronts. And that panic is itself a danger to how we go through this. Scared families, scared businesses don't spend as much as they'd otherwise do.
Okay, Evan, I wanted to ask you from a market's perspective, what do you think really drove that Friday rally? Was it the implementation of these further restrictions around groups, 500 people, etc., or is there a sense more globally that this might get under control soon?
No, I don't think there's any of those. And,
No.
and probably what I'd point to out of that is, again, if you have a look at what was moving there, there was a lot of money that came home late on Friday that clearly came out of basically the bigger leverage funds. And that is the word. There was certainly a lot of leverage flying around, and the leverage movement moved towards buying. And therefore it moved in. There was also a suggestion that a lot of the big players like your Vanguards, your iShares, so BlackRock, etc., were actually therefore also repricing a lot of their products like ETFs. So it's more of a market mechanism that was more of the mover.
Yeah.
I think you need to highlight from what Chris is saying is that, again, there's also trying not to be panic. And unfortunately, in scenarios like we have, markets do tend to become irrational and pricing moves quite rapidly. I'd probably go back to what happened on Thursday and have a look at the speed and veracity that selling was happening after President Trump's fairly, innocuous speech that really gave no confidence at all. So it's a hard one to sort of pinpoint.
Why was there also extraordinarily a big bond sell-off as well?
Yeah, and that's also probably part of the answer. I mean, in terms of what's going on at the moment. So the bond sell-off may explain half of it in the fact that, there is clearly flow of funds that are pushing it. We know that the bonds got to record level lows in the US midway through Wednesday when we got down to 0.3 of 1% for the first time in almost 2 years at the start of the week. The differential between the Aussie 10-year bond actually went positive, and that it also shows you the kinds of risk-free rate buying that's going on at the moment is indiscriminate, and then at the same time very rapidly return the other way. It's the kind of movements you don't ever see. Even during the GFC you didn't see that kind of movement in terms of that speed and veracity again. So my answer to all of this is that what is clear is the ability to price this is incredibly hard.
OK. Chris, we have heard, we've been talking about the demand side, obviously, the supply side. We've heard about possibly some green shoots in China. I mean, is that a good thing? And what would you be doing if you were the Treasurer today, we've just heard is free of COVID at the moment?
And yes, there is starting to be good news in China. The bigger danger is demand. We're scared we're not spending. But there is a set of problems on the supply side. The good news is China is increasingly going back to work. We have all sorts of indicators that show that is happening. That should free up a whole bunch of things. That's good news. If you're Treasurer at the moment, there's two battles. There's the health battle, and getting out that message to everybody, wash your hands, the social distancing, all those sorts of things. That is the most important thing. But the other thing, if you're Treasurer, is keep people in jobs. And I take your point around the tension, but there's still a lot of areas where they're not in tension. Keeping people in jobs is a vital thing to do amid, a panic and a shock.
Yep.
Chris, sorry, Evan, I wanted to ask you, you said that futures are showing another rise tomorrow morning upon open. What are you expecting in the opening couple of days? I'm not asking you to predict exactly what's going on, but more volatility by the sound of things.
Yeah, that's the only thing I can predict, and I think that's the only honest answer is also to say out there that volatility will stay there. I mean, volatility in the States, even with the snapback it had on Friday, which is their biggest update they'd seen also in 25 years, volatility in the US is still above 45. The VIX index for us here in Australia is still well and truly above 30. So that is the answer to all of that. What happens on Monday is, again, a question. I mean, there are things, as Chris has alluded to, that I'd probably point to as well that are positive. The other thing that's there from an Australian-centric point of view is that iron ore is absolutely not only resilient, it's continuing to go up in terms of price. It's at $96 a tonne. And they are also showing their demand for higher quality product at the moment because they've also clearly shut down their own operations. So poor quality iron ore in China is basically non-existent. So there are signs that it could be okay, but volatility is the only answer.
And Chris, finally, just notice what's going on in the UK with Boris declaring a war cabinet and actually getting Rolls-Royce and other companies to actually start manufacturing as if it were a war, respirators and that sort of thing. Yeah. We're going to see more of that?
And we need to be thinking laterally in Australia. We need to be willing to do things we wouldn't ordinarily do, and we need to be thinking and planning around that now.
Chris Richardson, Evan Lucas, thank you so much for joining us.
Thanks, guys.